visible cash flows. We expect that FY25 will be a year of normalized revenue and margin as we resume the investing phase. We are cautiously optimistic that our businesses will once again gain momentum in the subsequent years based on the current visibility of our projects and portfolio products. With that, I would like to hand over the call to Mr. Harshvardhan. Once again, thank you very much.
Thank you, Abhijit. Good morning, everyone. I will add a few comments on top of what Abhijit has said, and then we will open it up for Q&A. Given that we've completed another financial year, I'll share some of our thoughts on FY24. Coming on top of FY23, where we grew at 26%, we have been able to grow over 30% again this year. During the same 2 years, our EBITDA margins have also grown. They were actually 15% in FY22. They grew to 23% in FY23. And then further this year, they've grown to 30%. As I mentioned in the past, this is in line with our long-term strategy and is illustrative of the kind of business and the company that we want to build. Over many years, we've been consistently positioning Neuland as a pure-play API service provider with broad, complex capabilities, partnering with both innovative as well as generic pharmaceutical companies. As we stand to assess FY24, there are a few things worth mentioning. We have, number one, we have seen the CMS business this year contribute close to 50% of our revenues, which already had grown 30% last year. Our CMS business saw this robust growth in FY24 as some projects, as we mentioned before, are near launch while key commercial products continue to scale. Number two, we have added a number of projects across preclinical phase 1 and phase 2. In light of the improving biotech environment in the US, we see the new business environment continuing to look favorable. Number three, when it comes to the GDS business, we have seen some growth in specialty GDS business driven by paliperidone and a few other molecules, where there was a slight decline in price. This is actually in line with the composition of our product portfolio as different products go through different life cycle events at various stages. Having said that, we are continuing to develop new products and seeing increasing traction for them, even as DMFs are yet to be filed. The past year has seen a reiteration of our regulatory track record as both Unit 3 and Unit 1 were inspected by the FDA. Also, lastly, we are actively investing in long-term growth capex, which has been announced during the course of the year. We continue to remain conservative on identification of avenues for these investments. In terms of the quarter itself, while it was lower than some of the previous quarters, it's actually in line with our expectations and in line with our plans for FY24. We have seen significant revenue from both commercial as well as development projects, even as we continue to add new projects. Key molecules driving specialty GDS performance were paliperidone and dorzolamide, while mirtazapine and escitalopram were key contributors to the prime GDS business. As stated earlier, the business has seen increasing growth and profitability due to a favorable product mix as well as scale-up of new molecules. And we expect this momentum to sustain, bringing us healthy margins. Looking at the pipeline, we are excited on the long-term potential of the business. This will be led by commercialization of molecules as well as addition of new business. We continue to invest in creation of additional capacities as well as capabilities for reaching scale in new as well as existing molecules. In the short run, however, we expect moderation in revenue growth as well as normalization to some extent on margins due to the investments that we're making in the business and also input costs increases. We expect the business mix to remain steady and gradually improve. As always, we maintain that variables such as individual product performance, forex fluctuations, raw material cost volatility, and other business variables can have a bearing on our outlook. We remain vigilant of all such challenges and remain focused to capitalize on the new opportunities, ensuring that there is sustained growth and profitability over the specified time frame. Neuland's flexibility and agility will be the key in responding effectively to the evolving business environment. Also, I'd like to say that our growing reputation and the macro environment are ensuring that exciting opportunities come our way even as we work towards building a further differentiated customer experience. We will continue to invest for the future by adding capacity and capabilities, as I've already mentioned. By staying committed to our principles of customer centricity, agility, and operational excellence, Neuland is well positioned to capitalize on opportunities and overcome challenges and well on the path of achieving its long-term objectives. So having said that, maybe Ravi, I'll request you to open it up for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking the question. In the interest of time and fairness to all the participants, each participant will be allowed 2 questions. If participants have more questions, they can rejoin the queue. Ladies and gentlemen, we'll wait for the moment while the question queue assembles. The first question is from the line of Hussain Qazi from Ambit Asset Management. Please go ahead.
Hi, thank you. Thank you for taking my question. My first question is on our product pipeline. So as I see, there's a great jump in the phase 2 molecule pipeline this year. So if you could share some color on that. And additionally, now if I zoom out and look at our pipeline data since FY18, so the total number of projects or molecules, have not grown much from FY20 to 24. Like the total number was 76 in 20, now it's 88. So compared to the rise that we saw in the preceding 2 years. Now, I'm asking this in the context that, as far as my limited understanding goes, the larger pipeline is important in terms of diversifying from a select molecules and, of course, chance of having many such high-value products reaching the commercialization phase. So, if you could please throw some color on this. Thank you.
Yeah, thank you for the question. I think with regards to the pipeline itself, I think the near-term pipeline, the molecules which have been contributing significantly, I think they have been continuing to do well. I think the emphasis on new projects is there, and I think we are also seeing a steady inflow of new projects coming in now, which is what I had highlighted in my comments. Your observation is absolutely right. I think the kind of increase we had 2 years ago versus the increase we've had in FY24 is not the same. But having said that, I think we also went through that whole biotech funding crunch, and there was a little bit of a slowdown in terms of new project inflows about a year ago. At the moment, as it stands, we're seeing a steady increase in flow of new opportunities. New RFPs are coming our way. So I would guess that in the next 12 months, there should be an increase in the total number of projects. And also, one thing to bear in mind is that it's also important for us to track the quality of the projects coming in, right? So it's also important to make sure that we're getting, good opportunities which are, high value and rather just focus on the number alone. So perhaps somewhere also the team is becoming more selective and careful in soliciting the kind of projects that we want. Do you want to add something to this?
No, I think Saharsh has already answered the question, but I think one thing we need to keep in mind
Sorry, your voice is not audible. Can you speak a little louder, sir?
Yes, I think one thing we need to keep in mind is the fact that we are looking at the number of active projects. So this is not a cumulative number of projects. So even as we are adding projects, we find that there is attrition in projects from phase 1, phase 2, preclinical 2, which is therefore the number is at 90. So for 89, we keep a active track and try to assess the viability of the projects and looking even in the data.
Thank you. That's very helpful. And just in continuation to this, it's interesting that you mentioned that about biotech funding and all. So you have said that FY25 will be a year in terms of normalized revenue. But if I see our exceptional performance in FY23 as well as 24, this was in light of severe biotech funding pressure, which of course forms a major part of our client cohort. Now that is kind of picking up at least over the last 3 months from publicly available data. That plus the noise around the biosecurity bill, so early stage projects would be much easier to shift. And the third point is our one of our CSM product received a label extension. So don't you think all these increase from these would be able to kind of add to the revenue for FY25 and kind of shoot it much further?
I think our estimates for FY25 and the kind of indication we've given is based on what we are seeing as concrete, in terms of order book, in terms of visibility, production plans, etc. What comes out in terms of new business, we call it blue skies, is something that we cannot really model or predict into our revenues. There's always an estimate of how much new business will come each year. If you see the growth that we have achieved in FY23 and 24 was actually was as a result of the new projects we added in FY19 and FY20. So therefore, you would appreciate that there's always going to be a lag between the performance of the year versus the effort of getting in new business. So if we see a surge in new projects in the next 12 months because of this whole biotech funding, I think it will probably add more significantly to the business 2-3 years down the line, given the kind of projects that Neuland pursues. It may not necessarily add significantly for FY25 itself. So we kind of stand by what kind of indications we had given, because those indications are based on the order book and the firmness of the more commercialized molecules we have.
Got it. Thank you. That's very helpful, and wish you the best.
Thank you. The next question is from the line of Ankit Pandya from Incot Asset Management. Please go ahead. Yes, Ankit, please go with the question. As the response comes from the participants, we'll move to the next.
Hello.
Next question is from the line of Sudarshan Padmaman from JM Financial. Please go ahead.
Yes, thank you for taking the question. So my question is to understand the revenue segment. So we have seen a very favorable movement, with the high margin business increasing and the low margin business coming down. One is, as you have alluded, the order book is getting stronger. So even from here, I mean, where do we see the mix, between, say, a high margin prime, vis-a-vis, somewhat a low margin prime vis-a-vis the high margin specialty? The second is when I'm actually coming to the working capital. So it was quite, good to see the working capital also improving, on a year-on-year basis. I mean, where do we see, should we also, continue to see the improvement in the working capital?
Yeah, I think there has been a steady increase in the contribution of specialty vis-a-vis prime, and I think that's something that we expect to happen. I think it's hard for us to put a finger on whether this will continue to increase further or it will stabilize at the current level, because it really also depends on how our prime products will do. For example, this year I think Metazapine did really well. It grew a lot, and if some of the prime products continue to grow that well, hand in hand with the specialty products, then maybe the proportions will remain the same. With regards to the working capital, Abhijit, do you want to answer?
So at the end of March, we measure working capital to sales. So it stood at around 122 days to sales. Okay, we just kind of take.
Sorry, sir, your voice is not audible. Do you want me to reconnect you, sir?
No, I'm sitting in the same room.
Can
you hear?
We can't hear you, sir.
Can you hear me now?
Now it's better, sir.
Okay, so I can't shout.
No, you should.
No. So, at the end of March, we were at 122 days. And we calculate working capital days internally, and we give it out also as part of our deck. Okay, so we have been striving to kind of.
So now also it sounds little distant, so.
Sure. Can you hear me?
Can you want the brief answer you want to give? Yeah, just tell me and maybe I'll.
Okay. So we strive towards 120 days.
So our target is 120 in terms of working capital, and we are fairly confident that we can get there. I think there's been a little bit of a drop in this quarter, but that's also probably connected with the quarter itself. So that's it. Yeah. So maybe we can move on to the next question.
Yeah. One final question before I join the queue is, just taking cues from the earlier participant. I mean, when I'm looking at, the CMS revenue, I mean, there has been a very sharp jump on the commercial and the development side. We also know that, some of the products which have just hit commercial and typically, is expected to, gather momentum. So in that aspect, are we being a little bit more cautious, or, do you think that with whatever the visibility that is in hand, probably you still believe that, there would be whatever that is being built for would see a more visible or a sharper jump, say, 2 years down the line?
No, I think, Sudarshan, whatever commentary we are making, we don't necessarily look at it as being conservative or aggressive. I think we're just kind of giving our outlook the way it is. I think maybe every management or every company has a different degree of, tolerance. So I think maybe I would just say, if you want to understand what we are indicating, if you just look back at our last 2-3 years commentary versus and then try to trace it with the performance, you will see that there is consistency. Whether it is conservative or not is something I leave it to you. I think everything we are making in terms of commentary about FY25 and the year beyond is we are being very realistic. We don't necessarily intend to downplay anything.
Sure, sir. Thanks a lot. I'll join back.
Thank you. The next question is from the line of Ankit Pandya from Incort Asset Management. Please go ahead.
Yeah, hi. Thank you for the opportunity, and congratulations on a great set of numbers. So I have 1-2 questions. Firstly, for the quarterly result, the other expenses have increased by almost 21% on a year-on-year, and even sequentially by 23%. So is there any one-off over here, or is it because of the investments that we are doing? It's a result of that. Hello. Hello.
Hello.
Can you hear me?
Yeah, now we can hear you, sir.
Thank you. So actually, our operating expenses has gone as per our plans. As per our plans. But having said that, our operating expenses has gone up by around 18% because the rest of it is variable, and that is predominantly because of manpower costs, right, and other expenses, which is on account of professional fees, right, and some amount because of manufacturing expenses. But I must tell you, Ankit, that this is as per our plan, so it's not something that we were not aware of based on actuals.
Fair enough. And sir, another thing, in the last quarter call, you have mentioned that that we have purchased an additional land next to the Unit 1. So any update on that? How are we looking at? Will we start investing for that right now, or as in when we get more clarity on new projects coming in?
So I think the land was primarily procured to make way for the future expansion for the product that's being made in those facilities. So our we have a 5-year plan in place, and looking at the needs of that plan, we are adding to the capacity and integrating it in line with the projections. And that's pretty much the objective.
Okay. I said, what will be the capex guidance for FY24 and FY25, FY25 and FY26?
Capex guidance for FY25.
So our capex guidance continues to be the same as we have guided earlier. The baseline would be always 100 plus crores, but we will be opportunistic. If we find something which meets our growth plan, we would appropriately come back to you and obviously have to inform the stock exchange.
Fair enough. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Good morning, and thank you for taking my question. Just the first one is on the outlook as we look forward, right? You've talked about fiscal 25 being like a consolidation year. I remember in your earlier calls, you've talked about like a medium-term growth target of 20%, and look us not at quarterly, but more at a more medium-term level. So just want to get some of the key milestones that we need to keep in mind in fiscal 25 and 26. I'm just calling out a few things. I'm not sure whether I'm capturing everything. Like, for example, the corona molecules, do we have to look at the PDUFA dates coming up for the bempedoic acid label expansion? So if you could help us qualitative sense on some of the products that are in the public domain in terms of what are the things we need to look forward to. Take the point that there could be consolidation, but just want to understand what are some of the catalysts that we can see in the next 12-18 months.
Yes, thanks for the question. I think try to answer as best as possible. I think what we had always indicated is that, over a 4-5 year period, we will, be able to target a 20% kind of a growth. And I think that's something that we are comfortable, and our plans are all kind of built around that. Again, having said that, the growth is not going to be linear even on a year-on-year basis. So that is also something that we are seeing, kind of play out. With regards to the milestones that one should look out for, I think we have to just kind of, qualitatively visualize this for you. We talked about FY25 being, more of a modest growth, and then growth in 26 and 27 being far better. And I think the reason why we have also kind of given this kind of outlook is just based on how we see the current pipeline of products and their projections as we lay them out. A lot of this 3-year outlook that we have talked about is based on all the molecules that are already in the bag, so to speak. So these are not based on, any assumptions of some new molecule or some phase 3 molecule getting commercialized, etc. I think anything that happens at that level will perhaps, enhance the business, but that is unlikely to happen in the next 1 year. It could happen beyond the 1-year time frame. Unfortunately, as we have mentioned in the past, we won't comment on specific molecules in the CMS portfolio because of the confidential nature of the business. But I think whatever molecules we are, kind of commercialized already, I think we're seeing a sustained growth for those molecules. I think the molecules which are perhaps a step away from commercialization in the launch phase, I think we're seeing good traction with that also. So I think, that's kind of what I would say. Sujit, you want to add something?
Shyam, the only other point I would add is that irrespective of the news that we see in the market with respect to the specific molecules that we're talking about, it's very difficult to model those into any kind of projections, because sometimes even the analysts on the other side or our customers are not aware of how a specific molecule might perform. Therefore, as Harsh rightly said, we try to be as realistic as possible, take that into the future, and whatever comments made.
So your voice is little distant, sir. Can you come closer to the mic, sir?
Fine. No, that's all I'm saying.
Yeah. Okay. Thank you for that. Just the second question is on the generic side of things, right? Was there any comments on either pricing or volume trends for the quarter? Again, we're not looking quarter, but just trying to understand, because that's where, say, Prime was like down 16% YOY. So just trying to understand, is this some form of pricing pressure, or you think this is just phasing of supplies? Any color there will be helpful. Thank you.
No, I think Prime, although by nature has that kind of challenges, we've not really had any kind of issue.
And also, Sam, is that the Prime products, because of the nature of how they are, there's a lot of market share volatility that happens as well, especially in light of the new nitrosamine regulations and other guidelines that we've seen. We've seen some of the Prime products being affected based on how our customers are choosing to handle them. Therefore, we don't see any significant long-term impacts of that, but there are short to medium-term corrections. But the business segments, as Harsh was saying earlier, whether it's Prime, specialty, or the CMS, they continue to be healthy.
Yeah. And I think there's no particular challenges on pricing also in this regard.
Got it. Thank you.
Thank you. The next question is from the line of Sajal Kapoor from Individual Investor. Please go ahead.
Yeah, thanks for taking my questions. Before I ask my question, I want to make a small comment on our balance sheet. Actually, I've been very lucky with Neuland Labs. From a debt-heavy balance sheet in 2010 to net cash on books with the Nanak Ramgula transaction still pending, it has been an amazing journey of transformation and solid execution. So thank you for that. Coming to my question, over the next 4 years, we will likely generate an additional 2,000 crores of cumulative operating cash. So can you sketch out the capital allocation and dividend payout policy for the next 4 years? Because we are hardly paying any dividend today, which means that we are conserving cash and we have some capacity stroke capability plans. That's my first question. And my second question is, there was a recent news article in Financial Times that US FDA has been denied access to several Chinese sites in recent years, and a large number of auditors from Germany are refusing to visit China for the fear of arrest. We can add biosecure bill that has been tabled in the US Senate to this mix, and this becomes a very potent combo for an alternative supply chain, you would imagine, no?
So a couple of things, Sajal, on the CapEx side, as Abhijit was saying earlier. The baseline CapEx is going to be in the vicinity of 100 crores, and on top of that, we have a program for specialty or growth CapEx. So based on specific projects and the need for those projects and opportunities, and the operating cash that we are generating, we allocate whatever CapEx is required so that we don't lose out on the opportunity without taking on too much risk. So that's the overall policy that we have on the CapEx. We also try to maintain an internal benchmark where we don't want to allocate more than 60% of our operating cash to CapEx. But we're willing to breach this benchmark based on the opportunities that come available to us as well. Now, as far as the dividend policy is concerned, a couple of years ago, we had actually benchmarked against other growing companies in the market to see how much is a healthy dividend to be paid out for a growth-oriented company, and companies which have a similar financial health as we do and growth plans as we do. Apart from that, we've also taken input from advisors and consultants on what should be a healthy dividend policy. Today, we use those guidelines and we debate in the board meeting every year based on the profitability and in line with that dividend policy to declare that dividend for a specific year, and this practice will continue. I think the last comment about the Biosecure Act and what we're seeing in China and the impact of that, I think we're taking things as we come because there's two things. One, there is this overall bill about the Biosecure Act which hasn't been passed yet. The second thing is about how that will actually get operationalized and the impact of that we will see for India and other countries. Therefore, right now, what we're doing is what we control, which is to be in touch with our existing customers, potential customers. We're also doing business with China and other countries, matching our capabilities to their needs and seeing how we can put our best foot forward because that is what we can control. As Neuland, other things are beyond our control. And I think how the future plays out is something that we'll wait and see. Notwithstanding that, as you've noticed, we are taking aggressive bets on investing in technology, buying up land, adding to capacity so that we are ready to take care of the opportunities in the future. That's how as an organization we're thinking about it right now.
No, that's very thoughtful. Thank you, Sujit.
Thank you. The next question is from the line of Jaspreet Walia from Clockwine Capital. Please go ahead.
Hello. Can you hear me?
Yes.
So thanks for taking my question. So are there any dedicated plants that are part of your capex plan for FY25 with regard to the custom synthesis business?
I think the plants that are being designed or built are always, identified with 1, 2, or 3 products. But by design, they're always made to be multi-product facilities. So I think similarly, as we mentioned earlier, we tend to be a little conservative that way. So whatever plants we're building right now are also identified with specific products, but it doesn't necessarily mean that they are dedicated.
Got it. Thanks a lot. That was my only question.
Thank you. The next question is from the line of Harsh Bhatia from Bandhan AMC. Please go ahead.
Yeah, good morning. Am I audible?
Yes, you're audible.
Yeah, hi. Just one or two quick clarifications, a bit of micro and macro. At least at the peptide level, I think so 1 or 2 quarters back, you made a comment that we expect to file 1 molecule in this year, calendar year, and then 2 molecules in CY26 at the GTS level, and then there are a couple of molecules at the CMS level as well. So if you could help us understand where are we, at least for the CY24 filing. And I think so you also made a passing comment that the potential for the GTS molecules could be much higher than the CMS ones. I understand that there could be some volume-based growth from the peptide space, but if you could just refresh our memory for that, please.
Yeah, sure. Thanks for that question. We had two active projects in GDS which we are working on right now. The first one, which we expect to file DMF later this year, is beclexifilin, which is something that is still on track, and that is something that we are excited about. There's another one which is a GLP-1 which we are working on, for which the DMF will be filed perhaps maybe in 2026. And that's obviously, a very big opportunity, more for the generic side than the CDMO side. And I think both the projects, among a few other GDS projects, are progressing. We actually continue to even see increased interest from the generic customers. And our facilities and our infrastructure is also kind of gearing up for these molecules. But as I had indicated previously also, it's premature to factor in financial impact or benefit from these projects till we actually see some indications of commercialization. So I think that's something that is not really reflected in our short to medium term revenue outlook.
Sure. Just to clarify, CY26 is the GLP-1 asset. CY24 is also a GLP-1 asset?
No, it's beclexifilin. It's not a GLP. And I think the name is out there in the public domain. you can just look it up.
Sure. And lastly, more of a macro view, in terms of this entire GLP-1 space, since you are a lot more closer to the customers, whether generic or innovators, at both spaces, since there are many moving parts to this, if you could help us understand maybe the top 2 or 3 points that are like material for us to keep in mind, maybe at the patent level scenario, geography, how the innovators are thinking about it, because they are obviously consolidating it a lot more than what was anticipated, particularly for this space. So maybe just 2 or 3 points, like something that we should keep in mind for the next 2-3 year period.
Sure. I think, again, just, our own opinions may not be true. I think one, GLP-1 CDMO opportunity is very limited because all these companies who are the innovators are securing their own API supply chains by making them in-house. Number 2, the generic opportunity for GLP-1 is huge. And the beauty of this GLP-1s is that you don't necessarily have to focus on the quote-unquote regulated markets. The market is global. I think there can be a demand in India. There could be a demand in any other place because these are difficult to make peptides. So, developing a GLP-1 generic is not necessarily for the regulated markets. It could be for the local markets as well. Number 3, these are relatively higher volume peptides. So you will have to make tens of kilos of API if you are really successful, which means that infrastructure could be a challenge. You'll have to kind of foresee the needs, the capacities, and build accordingly. Because just having the process and the DMF may not be enough. We'll have to be able to fulfill the volumes also. Yeah, and also, so in terms of the launch, there is some unpredictability. We don't know exactly how the IP landscape will be, and innovators are constantly looking out for their own interests. So I think these are some of the high-level insights, and I think, but we are very excited about this space. Maybe the last point I'll also make is I think GLP-1s, they're going to be more GLP-1s. It's not just going to be the 2-3 we have already seen commercial success with. Maybe there's also a CDMO opportunity for fragments and building blocks for some of these GLP-1s, and that's maybe another input we can share at this point.
Sure, that's really helpful. All the best. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit the question to 1 question per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Dheeraj from White Oak Capital. Please go ahead.
Hi, thank you for the opportunity. I hope I'm audible.
Can you speak a little louder, sir?
Hi, is it better now?
Yeah, it's better.
Okay, great. Thank you. So I just want to understand that if you reflect on the last 2 years where you had significant scale up in the CMS revenue versus what you thought that you will achieve at the beginning of the year and then what you ended up achieving, how much deviation was there? So I just want to get a sense of how much visibility and how much dispersion you have from the visibility from the beginning of the year versus what you achieve at the end of the year.
I think, thanks for the question, Dinesh. I think if we look back at FY24, we feel that, we had achieved what we had pursued at the beginning of the financial year. I think even in terms of our budgets, internal numbers, etc., I think we've been kind of more or less on point. There's obviously some things which go better than expected and some things which may not go as well as expected. And I think mostly it kind of evens out. But bottom line, I think we're pleased, and I think now our teams have also kind of gotten more scientific and, really on top of the whole planning process. So now we feel that while there is volatility, lumpiness in the nature of our business, the growing size of the business and the better visibility we get from our customers and the improvement in our own planning process is at least helping us to visualize our business and end the year more or less as planned.
Okay, understood. Thank you.
Thank you. The next question is from the line of Suraj from Eastland Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah, I just have a question on just to get a understanding on how the margins would be going ahead directionally over next 2-3 years. If you can guide on that.
Yes, I think Suraj, we've I think had mentioned a couple of things, right? One is that the margins have improved significantly over the last 3 years, from 15% to 23% to 30%. Also mentioned that the margins will normalize in some sense, and I think the other thing I will just bring back into context is that we see that the business mix continuing to evolve or improve. So I think if you look at all these factors into consideration, one thing you would appreciate is that there are some unknowns that we have to deal with, whether it is the exchange rate, whether it is input prices, or it is the individual product mix. And considering these things, we think that normalization would be, kind of in some ways, we would think that FY24 margins were very good. They were better than expected. And therefore, we say that FY25, we expect some sort of normalization. But we have decided not to quantify anything further. But we think that because the business mix is continuing to evolve and improve, we see no reason for the fundamental potential of the business to actually reduce. But these individual parameters like solvent prices, exchange rates, etc., could have an effect on the overall margins. So that's kind of what I would say, just to help you answer. And I think even going forward, we continue to see the trend of the business mix staying the way it is, and the margins continue to be healthy. But we will not be able to, give guidance on whether it will be at 30%, how much will it come down, etc. But yeah, so that's what I would say.
Understood. Thank you so much.
Thank you. The next question is from the line of Divya Agarwal from Freecom Family Office. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congratulations on the great set of numbers. So I had a couple of questions. First is on the biosecure law. So can you give us the current status of the biosecure law? And the second question is on the continuation. What will be the impact if and when the biosecure law comes in? What will be the impact on the company?
Repeat your question, and if you could just speak a little slowly.
Okay, sure, sir. So I just had a couple of questions. So first is on the current status on the biosecure law, and second is on the as and when the the biosecure law comes into the place, what would be the impact on our company of the law coming in? Thanks, sir.
Yeah, I think Sucheta already answered the question. For us, we have to wait and watch what will happen. I think obviously the narrative is very favorable. I think a lot of American companies are talking to Neuland and other CDMOs about opportunity, about projects, and perhaps these conversations would have been fewer if this whole Biosecure Act was not being discussed. So that way, I think it's a positive thing. We'll have to see whether it will translate to actual business. So that is something that we are going to wait and watch. And what was the second question?
The current status. I mean, yeah, you have answered that. So, yeah.
Yeah. Thank you.
Thanks a lot, sir.
Thank you. The next question is from the line of Sanjay Kohli from Goldstone Capital. Please go ahead.
Good morning, and thank you for the opportunity. So the couple of the previous speakers have again brought up the Biosecure Act, and in this backdrop, is it safe to assume that there are a lot of visits now taking place from innovator companies and other companies who are now looking towards alternative sources? Are you seeing this happen? Did you see
I
this
think
happen in the
we can
previous
see
quarter?
there's a lot of requests for information, requests for proposals. There are definitely a lot of conversations. I think visits are something that I think post-pandemic have become more precious. People don't, just kind of come and visit facilities unless there is a quality audit or a EHS audit or something like that. So I would not say that, we have seen a surge in visits, but definitely we're seeing a surge in RFI, RFP kind of activity.
Right. Okay. And just to understand the company better, I want to draw your attention to slide number 12 of the presentation. And in terms of the commercial CMS projects, which are total in number 18, 8 plus 10. So I just wanted to understand that, of these 18, how many of these involve biologics?
None of them. We are essentially a synthetic organic chemistry company, so we do not make any biologics. They're all small molecules or peptides or peptide-related fragments.
Okay. Thank you. And I think we've already talked about...
I'm sorry to interrupt, sir. Please follow back the queue.
Okay, thank you.
Thank you. The next question is from the line of Atirik Roy, an individual investor. Please go ahead.
Can you hear me?
Yes.
Yeah. Okay. So my first question is, considering 3 points, we have not lost any customer in the past. Our custom manufacturing customers' patents will not expire till 2030. It is difficult to switch the supplier after the molecule gets commercialized. Will it be fair to assume that our commercialized API and intermediate count will increase quarter and quarter for at least few years?
I think the first 3 points, I think you just kind of reiterated what we had mentioned. And
the only thing we want to clarify is that, as you know, we do projects in phase 1, phase 2, and phase 3 clinical trials. And when we're doing projects in these phases, the attrition of these molecules can be very high. That means molecules that are involved in phase 1 or phase 2 may not progress to the next stage. Therefore, losing a customer or a project is not necessarily a bad thing. It's just the nature of the business that we're in. And as Harsh was saying earlier, I think it's hard to predict what will happen at a molecule level in terms of the market share as well as the growth. So we always look at a consolidated picture and we create a capacity in such a way that if certain molecules grow, we have the capacity to expand, and some fall, then we have these molecules that can take the place of the other, and that's how we plan it. Thanks.
Yeah, I was talking about commercialized API, not about registration and phase 1, phase 2 APIs. So will our commercialized API count increase quarter on quarter?
So, Atirik, I just want to clarify something, is that even though we have 18 molecules or 18 products which are there this is a result of the business that we have built up over the years. But what we have mentioned in the past is that the key molecules which constitute a substantial portion of our commercial revenues are around 4 to 5. And we, even as this progresses, we will keep talking about, or rather we'll be mentioning key additions, and I think that is what we need to keep in mind when it comes to the commercial projects.
Okay, thank you.
Thank you. The next question is from the line of Anirudh Shetty from Solitary Advisors Private Limited. Please go ahead.
Hi, thanks for the opportunity. I had 2 questions.
Sorry, sir, your voice is breaking.
Is this better?
Yeah, now it's better, sir.
Okay, I'll just repeat my question. So you speak about the China plus one opportunity for a lot of questions. I just wanted some of your thoughts on there would be manufacturing of API of the CSM in the West as well in Europe. So with all the cost challenges that are happening there, or some of them might have abated, but are you also seeing a lot of opportunity come your way because of an unwillingness to invest further? So more of a West plus one, Europe plus one. So just wanted your thoughts around that.
Yeah, I think we come across a lot of customers who have different strategies. There's customers who are looking at India as an alternative to China now, and therefore, that whole China plus one concept became very evident. There are also some companies who would rather, get their API KSMs manufactured in Europe, and if China is not working out, they'd rather keep it in Europe, and I think there are cases of that as well. We do see time and again in our CDMO business and even in our generics business that most of our competitors outside India are actually in Europe. We actually see less competition for us in China. And in that sense, the European CDMOs, European API makers are always a credible threat. And there is also capacity creation in these regions. So we see, some of the larger CDMOs actively create capacities, maybe not necessarily for KSMs, but for APIs for sure. And that is something that we have to be mindful of. Costs are something that obviously I think they work to our advantage, but again, depending on the customer, if they have the willingness to pay the premium for getting the drug substance manufactured in Europe, then they would not necessarily compare our pricing with the European CDMO's pricing. They would just, choose whatever is a strategically good fit for them. Perhaps when it comes to China versus India, it's more a pricing comparison. But when it comes to Europe versus India or Neuland in particular, it's maybe more of a strategic decision rather than just a pricing comparison. Not sure if it answers your question, but
no, it answers my question. Just one follow up here. Are you, basis your track record of good quality, are you seeing customers looking at you all differently? Because now the respect for capabilities has gone up, so the willingness to start comparing your products vis-a-vis a player in Europe is now something that they're considering more seriously today than what say they would have in the past. Are you seeing that change in customer? Are you seeing that customers might be looking at you all differently today?
Yes, Anirudh. I think what speaks for our credibility is two things. One is, 25-30-year track record of, with the FDA, a very strong quality culture, I think, which becomes a prerequisite for a lot of our CDMO clients. Second is, we've also, in the last 15 years, been a part of a lot of INDs, clinical trial manufacturing, and also a lot of NDAs. We've been part of a lot of PAI inspections. So that richness that comes out of, having taken NCs through the clinic into the commercial helps these innovators, rely on a company like Neuland, and that has helped us obviously, differentiate ourselves. We used to be also limited by our infrastructure, the size of our plants, and maybe even the lack of maybe modernization of our plants 4 or 5 years ago. But those are things that we've addressed recently as well. So I think all these factors are definitely favoring Neuland. The decision of working in India versus keeping a molecule in the West is more of I've seen that it's more of a board decision of the innovator company. It's got less to do with whether the outsourcing managers or the CMC groups have faith in Neuland or not. It becomes more of a strategic prerogative for the board, and that's why we see sometimes, although we may be a better fit than a European CDMO for a particular project, they decide to keep the molecule in Europe because they feel that, from a geodiversity point of view, that's what they prefer. And those are situations which unfortunately we cannot combat, but we still try to, try to do our best to get those kind of profits. So that's kind of what I would say to the follow-up question.
Thank you so much. It was very helpful.
Thank you. As that was the last question for the day, I now hand the conference over to the management for closing comments. Yes, so over to you.
Yeah. I'd like to thank everyone for joining the call and for the questions. As always, they have been thought-provoking and inputs for us as we run the business. We appreciate your interest in Neuland, and we may not have been able to accommodate everyone on the call. Please do reach out to Ravindra in case you have further questions. Have a good day, everyone. Cheers.
Thank you. On behalf of Neuland Laboratories, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.